Greetings, everybody, and a very, very good evening. It's 23rd of October 2025. Thank you so much for attendance and participation today. I'd like to welcome you all on behalf of NCM Group and Noor CM Academy. This is Mahsen Khan, and I'm the head of learning and education. So I prefer to keep the sessions interactive. At the moment, your microphones are muted, but at the end of session, we are going to take all your questions, and no question is a bad question, silly question, stupid questions. I do encourage any kind of questions you may have, and we encourage that. You can ask us questions in the chat box, or you can even raise your hand from the reaction section in Zoom, and I will unmute you, and you can even speak over the microphone. Okay? A quick verbal disclaimer before we begin, before we start presenting, before we talk about today's subject. Financial markets, financial trading is risky. Do not invest money that you cannot afford to lose. Don't even think about investing your children's educational fees, house payments, car rentals, etc., etc. So make sure when it comes to having a financial advice, you do refer to someone who is a licensed and certified personal finance professional. Okay, so this is how we are going to structure the presentation and today's session. First part of my conversation is going to be more of talking, maybe a little bit boring. It's going to be more theoretical. The second part of the presentation is going to be the technical one, where we'll discuss trading in general, using the trading platform, and third one is going to lead us towards the practicality. Okay, so I hope it's clear. So just a bit, I will introduce the company. I want to share my screen, and I want your help here. I want you to tell me if you can watch my screen. Can you see my screen? Is my screen clear? So this is the NCM Financials website. We have an office in Dubai in Mazaya complex, Mazaya Towers. Also, you can even download the MetaTrader 5. Here is the button. Just click on that and the MetaTrader 5 will be downloaded on your PC, laptop, computer immediately. And after you install, you can open a demo account. Now, before I open the presentation, I don't want to really open the presentation. Now, there are two ways that I always say that we can do a presentation. First method is the official method. Within 20 to 30 minutes, I can finish the whole webinar, the whole session, and complete the formality. Second way is that if you're here really to learn, if you really want to learn something of value, improve your trading career, trading journey, you want to learn something and improve your current experience in the world of these challenging financial markets, in the challenging international economy, then the webinar can take long. It can go more than 40 minutes to 1 hour and 15 minutes. It's up to you. You decide, but I want to know in the chat box what method you want me to use in today's session. Shall I go formally and finish the presentation in 20 to 30 minutes because everybody does have family they need to attend to? Or shall I take my time? We'll use the approach number 2, little bit mixture of formal and casual presentation where I'll go in depth and give you ideas on how to use Bollinger Bands in multiple ways to improve your trading journey. Thanks, Mr. Mahdi. What about others? Only one person is interacting. We've got Shirley, Miss Diana, Mr. Mohammad Iqbal. Great. Okay, I hope you have notes just in very easy words. Now we're going to talk about the introductory part. Financial trading is nothing more than act of buying and selling. Whenever you want to do shopping, you want to purchase goods. If you are into clothes and apparels, there's a specialized center or delegated centers where you can go and buy these products. You can go to the malls for shopping for your clothes. But if you're looking for dry fruits, there's a specialized, specific, designated market for that. If you're willing to purchase automobile parts, spare parts, there's a specific area in each and every country and city where you can buy. Similarly, things that are of great value, which are traded or transacted in millions and billions of dollars, they always happen to have on exchanges. Okay, now you can say there are 5 kind of important markets or 5 kind of financial markets. If you want to write it down, you can go ahead and write it down. The first type of financial markets is called forex markets. What are forex markets? Forex by itself stands for foreign exchange. Forex markets are the type of financial markets where leading, well-known or known currencies are traded, and currencies are always traded in pairs. I'm not going to go into detail because our most important topic today is the trading strategy by itself. Second type of financial markets are called precious metals markets. And what are precious metal markets? It's a special place where commodities like gold, silver, platinum, palladium, copper are traded. Third kind of markets are called commodity markets, where you've got coffee, corn, wheat, etc. Fourth kind of markets are called equity markets, where shares of a company are traded. Shares like Microsoft, Google, Amazon, Tesla, Visa, etc. Then we've got another market called index market, where indices like NASDAQ, Dow Jones, S&P 500 are traded. You can take this as a small assignment. You can research, or you can even use an AI like ChatGPT to understand what are indices like Dow Jones, NASDAQ, and S&P 500 to have an idea. And the last type of market is the cryptocurrency market, where leading cryptocurrencies like Bitcoin, Ethereum, Litecoin, Ripple are traded. Now we've discussed what are the type of markets, and the method that I'm going to teach you today, the trading method you're going to learn today, they are universally applicable on anything you wish to trade, whether it's cryptocurrencies, indices, forex pairs, or precious metals, or even energy markets, which have oil, natural gas, heating oil. All right. So that was the theoretical part. Now you have to understand something. There are 2 types of market behaviors. We have something called trending markets, and we have something called ranging markets. What are trending markets? Trending markets are something that have a trend. You will always have a higher high, higher high, higher high, higher high. Okay, and you might even have consistent lower lows, lower lows, lower lows. You know, there's a low, then there's another low, there's low here, low here, low here. This means we are in an uptrend, and this one clearly means we are in a downtrend. These are called trending markets. Then we have something called ranging markets. What are ranging markets? Markets that don't trend, they stay stuck in one range. Okay, markets that don't trend much, they stay in one range for a longer period of time. If you want to write it down, what are the best, and again, what I'm going to say right now is my personal opinion, it's not a financial advice. Okay, you can write some famous ranging markets. Number 1, you've got something called Euro GBP, EUR GBP, it's euro against the British pound. You've got the Australian dollar against the New Zealand dollar. You've got the American dollar against the Swiss franc. And you have something called AUD, Canadian dollar, Australian dollar against the Canadian dollar. These are quite ranging markets. They don't usually trend, and they stuck within a specific range. Now let's talk about trending markets. What are the trending markets? Trending markets are the type of trading instruments in which the direction stays in singular direction, where the direction stays singular, or it has a trading product that has a singular direction for a very longer period of time. Here you've got something called NASDAQ, you have Dow Jones, you have a currency pair like euro against dollar, you've got pound against dollar, you've got Japanese yen pairs like USD JPY, you've got like GBP JPY. These are trending pairs. If you want to take a screenshot, I'll give you 5 seconds. I'm going to count till 5. You can either take a screenshot or you can write it down. Okay? Here you have ranging markets, and here you've got trending markets. Okay. Now I will open the chart. I'm going to go to the MetaTrader 5. What is MetaTrader 5? It's a trading platform that's offered by the NCM Group. It's free of charge. It is free of charge. There's no hidden fees. There's no inactivity fees. It's easy to use. It's available in multiple languages. If you're comfortable in Arabic, English, you're comfortable in Hindi, Urdu, whatever, multiple languages are supported by MetaTrader 5. Okay. I'm not going to go through the components of MetaTrader 5 in detail, but I'll give you some idea. If you're new to MetaTrader 5, also we have mobile version available as well. This is called a charting area, where the chart of a trading instrument you're interested in, it will appear here. You've got the yen pair, whatever you wish to trade, it will be minimized at the bottom, and by clicking at these, you can always open a chart. I'll also teach you how to set up the chart, how to change the colors, how to add a technical indicator. We're going to talk about that as well. And here's something, we've got something called Market Watch. What is a Market Watch? Market Watch is a section, a place, or an area within the MetaTrader 5 trading platform where the trading broker offers available tradable instruments. So right click, show all. We've got more than 85 trading products available to trade, and you can see them in your free time. There's going to be a buying price, selling price, spread, and how much market changes on daily basis. Okay. This here is called the navigator. What is a navigator? Navigator, to keep it easy and simple, it's a section or an area within the MetaTrader 5 trading platform where you can switch back and forth between demo account and a real account. Demo account is a practice account. It's available for free, and you can use it to practice what you're going to learn today. And this here is the toolbox. Toolbox is an area where, for now, as a beginner, important for you is the trading section and the history section. In the trade section, you'll see the trades that you're executing, active trades, and the history. The closed trades and profit or loss, they're going to appear in the trade section. At the moment, the balance of the trading account for testing purposes is set to $25,000. And if you're willing to open an account, you can just contact our sales team and they'll be happy to support and guide you. All right. So I want to make the navigator and market watch disappear. I'll go to view. I'll go to navigator. It goes. I'll go to view. I'll go to market watch. It disappears. I'll go to view again. And then I'll go to toolbox. The toolbox disappears. Okay. Now, let's open some products. Let's open some products because we want to see, are the pairs that are ranging, that say sideways, they don't show any trend, is it true? Just to verify, then we will learn how to use today's method within that platform. So we talked about Australian dollar against the New Zealand dollar. So I'm going to drag and drop this in the chart. Okay. Here we have something called time frames. So I want to go to the daily time frame. Daily time frame is a chart on which each candle is of 24 hours. So here is the daily candle, daily chart, and the data is loading. You can see that the Australian dollar against the New Zealand dollar, it often stays within the same range. It doesn't really trend. Let's add a box here, and we'll break it down, and we'll teach you how to use it. Can you see that? We can see this is a daily chart. I'm going to grab from 2019 until 2025. And let's fill it here and probably make it a bit darker. So you can see here, it never had a strong trend. It has always been a specific range. It goes up, it goes up, it comes down, goes up, it comes down. It has a kind of a fixed range. So we have identified from this exercise that the Australian dollar against the New Zealand dollar is usually in a sideways range. Okay, we'll take one or two examples only. Now, we did discuss that the yen pairs. Sir, what you're considering to implement while trading and which concept? Okay, Mr. Mahdi, we're going to cover this. Our main topic today is to learn how to trade with the Bollinger Bands. We are going to discuss and disclose the trading strategies that are related to the Bollinger Band trading indicators. At the moment, we are just learning and verifying what are the ranging markets and trending markets, and then we will go into trend trading strategy and range bound strategy. Okay? I'll answer your question more in detail. Okay, so for now, team, we've verified that the Australian dollar against the New Zealand dollar is a ranging pair. And in the ranging pairs, we want to buy low, sell high, and we want to keep trading that way. Now, we're going to go for some trending pair. Let's consider probably GBP, JPY. Right click, go to chart window. Let's go to the daily chart. If we go to the daily chart, we can see that the pound yen is often trending, and it often goes always in an uptrend. The information I get after viewing this structure that pound yen often makes higher highs, so it could be wise for traders to often target for buy position and ignore short sales. That will be talked about later. Now let's go to the indicator. What is a technical indicator? Please write this definition down. Technical indicators. These are built-in tools. These are built-in tools within a trading platform. That help with the following. Number one, identifying the market trend. Number one, what's the use and purpose of technical indicators? Number one, they help traders in identifying a trend. Number two, they help traders in decision of entry and exit points. Okay, so I'm gonna remove all these indicators. We've got some moving average, so right click on the chart, go to the indicator list. So if you have anything extra and you want to follow me, right click on the chart, go to indicators and delete everything. This is step number one, make a clean chart. Step number two, set good colors. Color your chart properly so you can watch it easily. It doesn't put stress on your eyes. These are the colors. You can take a screenshot if you wish. I'll keep talking for a few seconds so you get a chance to take a screenshot. Set up your chart in this way. The colors are also important because the more clear chart you have, the easy decision you'll have. The less stress the chart colors put on your eyes, it will be easy to observe and monitor without creating most amount of stress. 0.01 lot is the smallest lot size you can trade with. So even if you open a demo account, try to trade with 0.01 lot size only until you're comfortable and you grab a decent grip. Okay. Now we're going to put Bollinger Bands. It's important to understand in today's session, it is not important to know what is the science, what's the logic behind this indicator, how it's developed. Our job is to understand it, that it is a built-in tool, and how we can use this tool to increase our chances of success. So we go to insert, indicators, trend. Why is it in the trend section? Because this indicator is used when the markets are trending, and it's more beneficial when the market has caught a trend. Either it's towards the upward direction or a downward direction. When the market is ranging sideways, it is stuck, it cannot make any decision. This indicator fails, but I'll show you how to make it successful. So select Bollinger Bands here. They were designed by William Bollinger, and these are default settings. You don't need to play with the default settings. There's a reason why they have default settings, because default settings do work. Okay, so I want to go only change the color. I'm going to go for yellow color and increase the thickness to 2. Let's hit the OK button. Okay. Now the Bollinger bands, there are 3 bands. There's something called an upper band, there's something called a lower band, and there's something called a center band. Some call it outer bands, some call it inner band. Up to you. There are 3 components of a Bollinger band. There's an upper band, mid band, and a lower band. Okay. Now, if the Bollinger bands are squeezed, they are compressed. Okay. If they're squeezed, they are compressed. It means the market is in a sideways range. The market is not trending. If the Bollinger bands, they are expanding, the mouth is open. In other words, it means that the market is in a trend. When they're squeezed, no trend. When they're expanded, it means that there is a trend. Trend is your friend, which means if you trade along and with the trend, you're going to be increasing your chances of success. You can see here another example. Here, the market is in a consolidation phase. It's stuck in a sideways range. The Bollinger bands are squeezed. So it shows us the trend as well. And even same goes here in the past. The Bollinger bands are squeezed. Okay, so we've learned to understand now how Bollinger bands, they can help you in understanding if the markets are sideways or they are ranging. This is a daily chart you can use on any chart. If you're someone who is a day trader, okay, you can go on 15 minutes chart. You can use 15 minutes chart for your trading decisions. It's totally fine. It's totally okay. And if you're someone who is a swing trader, you can even use a 1 hour chart, or even you can use a 4 hour chart. So before we move further, kindly confirm if it's clear to you what is the purpose of using the Bollinger bands and how do we identify the trend. Is it clear? Can you please help me in understanding by typing in the chat box? Can someone help me here? Mr. Muhammad Irfan has confirmed yes. What about others? Shirley, Iqbal, Diana. Thank you, Mr. Iqbal. Thank you so much. Let's go back. Now we're going to talk how to use them. Okay. Have an idea. Thanks, Miss Diana. Thanks for confirming. See, now let's talk about it. In ranging markets, most traders or many traders who call themselves trend traders, or who are fans who really love trading with the Bollinger bands, they sometimes, I'm saying they, sometimes would consider and use the lower Bollinger band as a support, upper Bollinger band as resistance. Okay, so what they would do if the market is moving, if it comes and touches the Bollinger band, if the word is if it touches the Bollinger band and they see decent number of green candles formation, they would take a buy and they would hold that buy until the price reaches the center band. Like they would take an entry here and exit at the center band. Same concept, if the price touches the upper band and a strong red candle. What is a strong candle? Red candle, the one that is larger in its size. Okay, that's larger in size and it has a fast move. They would take a short sell trade. They would take a short sell trade and they would take the target. They would exit that trade at the middle band. So Lower band, it can be used as support, upper band can be used as resistance, and the center band can be used as take profit. Is it clear? Is it fine? Is it okay? This is style number 1 of trading. So we have an example here. Let's talk and discuss few of the examples. I'm going to go on a 15-minute chart just to see if you understand the action. So we have the, sure, Mr. Muhammad Irfan, here. The lower band is used as support. The upper band is used as resistance. The center band is used for taking targets. So traders, they wait for a pullback market to drop and touch the Bollinger band. And at the formation of green candle, they would take a buy. And at the center band, they would exit that buy. Okay. And if they are taking a short sell, if they see a red candle close touching the upper band, they would take a trade, they would take a short, and they would exit at the center band, which could be here later on in the future. This is style number 1. This is a green candle. Here is the target. This is a red candle. Here is the target in the center. Is it clear, Mr. Irfan? Is it fine? Great. You're welcome. Let's proceed further. Let's move further. Okay. Now, we can understand that if we analyze, if we see that the market originally, it is an uptrend. When it is an uptrend, okay, traders would often go and aim for buy trades. Now, I want to go for more variations here. I want to make it more complicated, but I will support you and guide you and assist you in understanding it. Now, this is the upper band, this is the lower band, this is the center band, right? Now, it's also okay that if a trader was buying here at the lower band, they can also exit at the upper band. And if the traders are short selling at the upper band instead of the middle band, they can even exit at the lower band. This is the second way of trading. Is this way also clear as well? Is this clear? This is your second way. Now there is a small trick. What is the small trick? You add 200 moving average, insert indicators trend, 200 moving average. You can use any color. And the concept is, if on a larger time frame like a 1-hour chart, if the prices are above the moving average, it means the market is in an uptrend. And if the market is really on an uptrend, then you switch to a smaller time frame, like a 15-minute chart or a 5-minute chart. You can use for seeking buy entries. Now I'll go back to the 1-hour chart, and you'll see since kind of 3rd of October, the market has been an uptrend. So let's go to the 5-minute chart. If we zoom out or we go back since 3rd of October. So this 200 moving average acts as a filter. So I'm going to go to the 3rd of October and let's see how opportunities could have been grabbed here. Please try to spend some time till the end of the webinar because I'm going to discuss more stuff. Okay, so here you go. Here is a breakout. It's an uptrend. It's an uptrend. And then we have a pullback here. When it comes to the lower Bollinger Band, a green candle closes here. You would take a buy entry, and when the candle or the prices, they reach the upper band, it's not so much of a profit, but it was a successful one. You could have exited the trade with few pips. Same case from here to here. Then you've got from here around this area, a green candle here. It touched the lower band, it went up. Then it spiked up crazily and it kept going up. Again, there's a pullback. A green candle closes above the lower Bollinger Band. Center band is the target. You could have taken here as well. Here it touches the lower band. Then a green candle closes. This would be a buy. And you could have exited here in the center band. Same thing goes here. That's a buy. We are going to talk about money management, risk management, stop losses later on. And here it closes. Same, it goes and touches the lower band, a green candle closes, okay? You would take a buy and exit that buy at the center Bollinger Band. And that's how this method works if you're willing to take buy trades as per the first Bollinger Band method. You can even trade from lower band to upper band. What do I mean by that? What do I mean by the upper band, lower band? You can trade like this. Let's grab a drawing tool like this. Instead of exiting, let me make the thickness a little bit more. You could have even taken trades like this. You could even target the upper bands. For example, if you took a buy here, you could have exited here. If you took a buy here, you could have exited here. If you took a buy here, you could have exited at the upper band. So it's band to band movement. Fine. Now, third way, I'm going to teach you the third way as well. You're going to learn the third way too. Okay. What's the third way? You know that there are three bands. Okay. See, there are three ways. You can choose any one you wish. You have got a center band. How do you use this? When a price or a green candle closes above the center band, if it closes above the center band, you take a buy here and you exit that buy at the upper band. If the price closes below the center band, you can take a short sell and exit that short trade at the lower band. Okay, this is also one of the cool and best ways to trade with. Let's look at some examples. Let's look at examples. For example, here, you've got a buy trade here. Can you see that? A green candle closes above the center band, and your target would be upper band. Where is the upper band? It kept on stretching, so it exited here. Okay, then you have a red candle. In business, profits and losses go hand in hand. Losses are part of the game. It is usually said your stop loss should not be more than 2% of your trading account size. I personally say risk 0.5% on demo account. Practice and try to grab and understand it. So here you have a red candle close below the center band, and you can see it hit the lower band. Then again, you have a center band here, green candle closed above the center band. This was not successful. This sell, however, the red candle that closes below the Bollinger Band, this was a successful trade. Again, there was an opportunity to buy. It was not successful, but there was opportunity short. It hit here, it was successful. Green candle closes above the center band, it hits the upper band. So this turned out to be a decent success. So is this strategy, is this method clear to all of you? Is this method clear? Can you all say clear? If it's not, you can let me know. I can repeat that again. This was a simple Bollinger Band trading method for trending environment. Now we are going to do a trick. We are going to learn how to trade sideways markets for those who are interested in trading currencies that don't trend that much, especially when it comes to trading Euro GBP. So I'm going to pull out a Euro GBP chart and we're going to see how it works. Let's go to the market watch. Let's look for EUR GBP here. Right click, chart window. Now, see, I have this chart here. I don't want to set up a new chart. So what I do here, right click on the chart. So indirectly, I'm teaching you also how to use the MetaTrader 5. Go to templates, save templates. I'll click on Bollinger Bands. I'll click on save. Yes. And that's it. So now when I go to the Euro GBP chart, I right click here, go to templates, select Bollinger Bands. It will load by default. Okay. Let's go to the 15 minutes chart. We're going to get rid of the 200 moving average. You can see here, Euro GBP is always also in a sideways trading range. It doesn't trend so much. Can you see that? It's always since 2020 until 2025, it stays in a fixed range. It doesn't go up that much. It has this kind of center of gravity here. It has a kind of center of gravity. The market doesn't break above this. It doesn't go much above this. It gets pulled back in, and if it goes down, it always gets pulled back to this level. So there's also a way to trade. Even if you're wrong, you can be successful, but that's not part of today's class. It's on that class is only for our clients. So let's talk about how to trade the sideways trading range. Okay. You go to insert indicators, trend, Bollinger Bands again. Go again. This time, deviations, you make it 3. Change the color. Change the color. Okay. And increase the thickness to level 3. Hit the OK button. The chart does look kind of messy, but something really nice. This method was used by Kathy Lean, one of the very famous market analysts. Okay, so how do you use this method? Now, please focus. Now you have an upper band. You've got a center band. Then you have a lower band. If you feel that the market is in a sideways trading range, okay, let the market come in these lower bands. Lower band number 1, lower band number 2. So let the price come inside this zone, okay, and if it closes, a green candle closes here within this outside this zone, after coming in, you would take a buy and you would hold that buy either till the center band or till the outer band. And again, from the outer band, if a red candle closes, you will exit at the center band, or you'll use lower band to exit. Is this method clear? These bands show they are kind of filter zones. You can also say indirectly that when the price comes in this zone, upper zone, it means the price of trading instrument is expensive. And if the price comes into these lower zones, it means the price of trading instrument is cheaper. This is for sideways trading range. But if the market is trending, if it's a strong trend towards the upward direction, it would be okay to buy if a green candle closes within upper band, and assuming because it's trending, the market will make a higher high. If a red candle closes in the lower bands, if the market pressure is down, it's okay. It means market in a downtrend will make lower lows. So if a red candle closes within these zones, it's fine to sell. You can do the opposite. How to do the opposite? Let's look at the chart once more. And I'm going to zoom out. Let's see. Can we go to another chart? Here. Green candle, it didn't come in this zone. Here, a red candle closed this trade is not called. Let's go for a trending market instead. Let's try gold. Okay, let's try gold. Template, Bollinger Bands, insert indicator, trend. Bollinger Bands. You can pronounce it any way you wish. Let's get rid of the moving average. Okay, here. This is a 15 minutes chart of gold. And you can see here a couple of times. Since the market was in a downtrend, if we zoom out, you can see the market is in a downtrend. How do we know that the market is in a downtrend? Because it's making lower lows, it's making lower lows, it's making lower lows, it makes lower lows, right? So this is clear to us. So whenever you see a red candle in a trending environment closing below in this zone, in the zone of the lower zone of the Bollinger Bands, you can even take a short sell, and you can even hold that short sell, keep it moving. If it gets pulled back to the center line, you can even exit. So it didn't. So it was a decent win. Okay, where did it get pulled back? It got pulled back here till the center line, and you would have exited this trade. So it was in a downtrend, but it gave us multiple opportunities. You had a green candle close, a red candle close here, red candle close here, red candle close here, and red candle close here. These are all short selling opportunities. Let's look for even buy opportunities in parallel. Let's go for buy opportunities. Here we have an uptrend, a strong up move happening in the gold markets. You've got a green candle that closes in the upper bands. That's a signal to enter for a long trade, Then again, here's a long trade, here's a long trade, and you can see it has been quite successful. So this is a trend trading strategy with Bollinger Bands. I did my best to keep things simple for you today. So today was level 1. It's an introductory level, and level 2 is available for our clients. If you are a client of NCM Financial and you want to have one-to-one sessions for more understanding and clarity, you can get back to the account manager to guide you how to do that. And from my side, I think as beginners or introductory session, it's enough for today. So we've learned what are the type of financial markets, what are trending markets, what are ranging markets, what is the purpose of Bollinger Bands, how they could help us with entries and exits. We can't cover the money management and risk management lesson today. We'll cover that in another session, but I believe I've equipped you for decent basics. We've discussed multiple methods. You don't have to learn all of them. You can even stick with one method. Okay, and if you're willing to trade gold, you can trade gold with 50 pips stop loss and 150 pips take profit on a demo account, and try to get some idea and see how it works with proper risk management. And that's it from my side. Thank you so much. And if you have any questions, let's have some questions, and I'll be happy to answer them for you. Any questions? And really, once again, thank you so much for your participation today in today's session, today's webinar. We've got more amazing webinars coming soon. So do request your account manager to send you our official YouTube channel. There are other good, decent English tutorials as well available for you, and even in Arabic as well. So this is Mahsin Khan. Thank you so much for your participation and attendance. If you have any questions, do let me know. Otherwise, we can end the session. Any questions, everybody? Was it easy? Was it difficult? All right. Have a great evening. We wish you a lot of success with your trading journey and career. If you have any issues, if you have any questions, you want more trainings, feel free to contact us. Have a great evening. Take care, and bye bye for now.